What's going on, everybody? It is Friday, May, what is it, the 21st. Had a really solid finish to the week. That was cool. Happy with that. We'll jump right into the review. My first ticker I traded today was Envb, this one right here. I called a zone on Anbs in the pre-market, and I was kind of watching it simply because it was going really nutty. And boy, did it went nutty all day. But I didn't actually trade it until significantly later. So we'll start at the beginning. Envb was my first trade of the day. I called it at 8:38. So 8:38, that would have been right here in this candle. As soon as this candle opened, I had set it. So we were up here in this action, and I called this zone down here. 295 down to 288. So you can see that the zones were based off of there. So I based this zone off of a pre-market high and pre-market resistance. So I don't consider this, like these highs, these wicks, they definitely can act as a resistance for sure, right? However, and this is why I like the 10-minute chart so much, especially in corroboration with the others, and this will come into play later on ANV, or maybe ANVS, I don't know. But I paid a lot of attention to this because you'll notice that here you're seeing bodies kind of peaking above this line, right? So if you were looking at this chart or this chart, you would probably say the resistance was closer to 2.9, right? But in actuality, you come over here to the 10-minute chart and you see that price rounded off right here because these candles take into account 2 of these or 5 of these. So it's crunching all of this information just to give you an overall idea and look, which is why I would consider this 288 the actual resistance, the point where price rounded definitively. And, this was what I would consider a lighter resistance, as it was just a price wick. So anyways, that's how I form my zone. I get a lot of questions about how do I make my zones. Usually in the morning, I try to take into account pre-market. I really like to see action like this, where price is above its pre-market highs after the open. That's always good. Because it means that I can usually quite easily factor in pre-market highs as a zone to look for. It doesn't always work, but it is a decent probability. I do like that. So anyways, yeah, 295 down to 288 was the zone I called. As you can see, price did come down to fill me. Not in full. I ended up getting, I think, 2 of 4 bids, but like I've said in other videos, I've started to get a little bit more aggressive with my bids. So I'm putting bigger bids throughout as opposed to small bids and then one big one at the bottom. And that's exactly for this. As I start to see more moves, fill tops of my zones and not all the way, I don't want to, I still want to be in these moves. So I'm not, taking a whole position up here because I still don't want, all of this extra downside added to my stop and my cost average and everything. But in a way that still gives me the ability to bid, to have my descending bids, but also if I get filled in, I don't want to feel like I'm in a useless move. So, right away, we planned for 3. Now that's only from that point about 7 cents, which is fine. I mean, if that's the kind of scalper you are. I was actually holding. I didn't sell, simply because I thought to myself it could pop up here, go over 3. Which would be great. And my next PT would have been right here at the 3-1. Or, it could come back down and fill me in full, and then I could get an extended move upwards, right? So I actually held through 3. 7 cents just wasn't enough for me. I was willing to, risk the downside, which ideally would have filled me. But instead it went up, broke through 3 in a real quick rally. I mean, you can see that these are 2-minute candles here, and it's just pretty much 6 minutes, and it's pushing to high day. Obviously, I don't hold for high of day, and the reason is because, it's secondary rallies. It's not common for them to make it to that point. So I sold in full right here for a good what was that, 18 cents or something, which is a good trade. I mean, it's a good trade. You know, my stop loss is actually right down here at 2.8. No, it was actually lower. It was 2.78. Because that would have given me all this, and it made this 10 cents. So because that is such a small gap, I was able to size a bit bigger. So, you know, sometimes you can make the same money on a 15, 20 cent move as you can on a 50 cent move, just because it depends on what the stock's daily range is, your position size, and all that stuff, while all, you know, at the same time maintaining the same risk level. So that is that's a good trade. That's a good trade. Yala, man, Yala was a great start to the morning. I really liked this one. So at 8:39. So at 8:39, let's see. Yeah, at 8:39, I said that Yala needs to get over the pre-market highs so that it can have, strength going upwards. I said 8:39, Yala needs to get above the pre-market high and consolidate. We'll peep it a bit after. So this is the pre-market high levels I was talking about here. And you can see that in the first 10-minute candle, and you know, that would have been this action here. It came up and then it came right back down. So if you're looking at the 10, that tells me that yeah, sure, this wick is above here. So it did at one point break pre-market high, but the close below it tells me that no, this is still respecting pre-market high as a resistance. You know, don't count these anomalies in situations like that. That's just like the last trade. I like to see the bodies of the 10 to kind of tell me where the real resistance was, because you know, this was not, you know, anything that I could have based my movement off of. If you took up here and you know, anticipated a rally upwards, you'd be, you know, adding it quite a high. Anyways, so I waited for that. It popped up, right? It came up. I said, I'm taking 18 to 17.9 on Yala. That would be right here. 18 to 17.9. And as you can see, boom, filled me in full beautifully right here. Yep, that's it. So it filled me in full right here. My stop loss is actually going to be very simple right here at this low of this run. Let me show you what that looks like on the 5 and the 10. So had it come through this level, I know that at that point it is no longer the bottom of the trend, and that the trend could potentially continue and bottom out down here. But the point is that I'm trying to catch bottoms of trends so that I can get good dip ads and good value entries to ride them up. So if this is no longer the bottom of the trend, then my entire system and my value entries, you know, they're really not that good. So that's why I want to be stopped out there. So you're looking at a 16-cent loss, perhaps 16 cents, which is really favorable, really favorable. So my first PT was going to be this 18.5 area, just to kind of watch, and then we were going to shoot for this rally. So right away, I looked to the 10 and the 5 here, and I noticed that, you know, what do I always say? A wick zone fill on a 5 and a 10-minute chart, that's usually a really good sign, because by the time you get filled, you're immediately in the money. You're already you're green. I mean, the bottom of your zone was literally the lowest price got, means that you never even had downside risk. You know, obviously not every trade has to be like that, and most of them won't, but when you do see it, it's pretty bitchin'. So quickly price came up, hit that 18.5. I scaled out a little. I took half. I raised my stop loss from down here up to break even, just to kind of protect some a little bit. I considered that if it came back down to VWAP, I might add and shoot for a free play, since I did have such a good entry. But I didn't even get a chance, because as soon as it broke through this level, it broke through this level, and I took full profit at this, you know, these bodies right here, this level of resistance. I actually sold at 18.7. But I mean, that was a 70-cent move right out the gate, Oh, it was a beauty. And a little bit later, I caught a second move on Yala. Let's go ahead and do that one next, since I'm already on the stock. We'll take again 1825 to 1809. 1825 to 1809. Oh no, I must have not got filled in this. Where was it? Oh no, I missed it. I missed it. That's right. So I took just the one trade on Yala then. And freaking awesome trade. I mean, shoot, 70 cents with what was it, a 15-cent downside or whatever. I mean, that's you didn't get much better than that, man. That's awesome. You could have caught this move right here. This is the move. I was actually watching other tickers, so I missed it. Really, really easily, you could have assessed a zone at 1845. You could have incorporated. Oh, that's the same level. So 1845 is the is pre-market highs. You could have made a body, used the body right here, and had an 1845 to 1818, and that would have caught this move for you. So as you can see, you would have not been filled in full, but filled in half the zone, and shoot, that's over $1 move in 10 minutes. Or you could have scaled that at 19 for a 50-cent move really easily. Looks like it came up to 1925 even. So, I mean, this ticker was slept on, dude. It wasn't. I didn't see anybody besides me mention it in chat. I was surprised because this was a. I mean, the range was so good. I really love tickers that are $10 to $20. I feel like the upside is great. You can usually have meaningful position size while also still having pretty reasonably small risk. So like in this case, I would have risked 1781. You're talking about a 40-cent downside to what ended up being over $1 or close to $1 upside. But you could scale that here for, just assume that the bottom of your zone was where you're comparing. That's 80 cents, and that's $1.30. So I mean, that's a great risk to reward. You also would have look at the beauty on this chart. You would have been wick filled and been extremely in the money. Same thing on the 10. The 10 and the 5 are both telling you good signs. VWAP being respected with the wicks. I mean, dude, it was just a great setup. So I'm really upset that I missed that one. It was, I mean, that could have been in one trade. If you managed to get the meat of that, even taking 18.5 major psych level down to pre-market high, that might have been the move. Maybe pre-market bodies here, 1823. That probably would have been more ideal. But yeah, so you take major psych level, 18.5, all the way down to, which is close to this, 18.45. Because it really, 5 cents isn't going to make or break you. But, I mean, that could have been a great move there. If you took that, you would have got the meat of your ads filled. Maybe just one you would have missed. And, yeah. So, I was really jazzed about Yala today. I feel like it was those two trades right there were the sleeper trades of the day, in my opinion. Super low risk, really great upside. Very quick moves, too. They were very easy to scalp because the breakthroughs pretty much took out all the profit targets all at once. So you could have sold this pop right here. You could have sold the break of 19. It all happened all in one motion. You never really were exposed to any downside. So I will be remembering those. Those are some good ass zones. UONE. Did I take UONE? I did. This one was a loser. Let's see. Where did I take it? Oh, right here. Where did I sell it? Oh, this was much later in the day, it looks like. Yeah, it was. This was at 11. So yeah, this must have been at work. So let's move on to the next one then. Yeah, I said Yala, y'all sleeping on Yala, blah, blah, blah. Okay, so Wafu was a loser. And so was, I believe it was JZXN. So we'll go over those real quick. Because it's just as important, if not more so, to go over losers. The great grab on this one would have been obviously this pullback. You could have taken major psych, 8.5, major psych level, down to the high of this rally right here, and that would have been the perfect zone fill. If you don't want to use 8.5 as the major psych, you could have used this wick, which would have put you right at around the same zone. You know, that would have been, I mean, dude, that would have been an amazing move. Amazing move. Man, we had so many great tickers today. Unfortunately, I did not trade that. I ended up taking this exact zone, though, based on those exact same things I just mentioned, but I took it on this side. And, you know, I saw that the volume was dropping. I didn't expect a move up to here. Instead, I was simply shooting for a move to VWAP and then to 9. So I was looking for about a 60 cent to 80 cent upside. My risk was going to be, I think it was right down here. Yeah, it was. I actually have pictures. Let me see. Which one is this? This one is Wafu. Yep. My risk was actually 8. Yes, okay, so taking this zone, filled, consolidated, looked good. I mean, this is the exact same zone as earlier. And then it eventually did come out. So I did call that one out, and I, you know, called it out in chat that I was out. I had lost, but, you know, I'm not upset about that trade at all. Not upset about that trade. This action going to new highs, you know, there was a good chance that I could have gotten at least this level for like a, you know, to complete a head and shoulders or something. So, you know, I will take that trade 10 out of 10 times. 10 out of 10 times. I don't think that was a bad trade at all. Much, you know, it's one thing to lose on a trade where you're like, dude, I had no business taking that trade. But I hold my head up high when I take losses on trades where I'm like, you know what? The idea was great. The plan was great. That is just, you know, every system, every trading system you have, let's say you have a 60% win rate. 60% win rate is what you can expect, right? So 6 out of 10 times you're going to win, 4 out of 10 times you're going to lose. This is one of them where your system looks like it's ready to rock, and it's one of those 4 losses. And there's nothing you could do. That's just the way that the stats and the data go, you know? So it's important not to beat yourself up every time you take a loss, because sometimes it's just, you know, the losses that your systems already have priced in. So JZXN, same situation. I was trying to catch a secondary bounce with reasonable price targets. Had it continued where my zone was, it would have been gorgeous trend, and it just didn't hold up. But again, I took my definitive loss. I didn't, you know, adjust my stop. I sized accordingly. I risked the same thing I always risk, the same rules, same risk management, and I got stopped out, and that's okay. So 1210 to 1189. I'm gonna try to do this over here so that I can give you guys 1210. I wonder how I made that one to 1189. Yeah, 1189 was, so it's very easy to see where I got 1189 from. 1189 was the high of this candle here. Where did I get 1210? I wonder. Let me see. And sometimes Weeble and Thinkorswim look completely different. Oh, you know what? I think it was based off of this price action. So this is a moment where I took support level on the 2. So right here, that would have been, you know, within this candle. So yeah, I took this flag pattern on the 2 before it ripped, and I used that as a support. Realistically, it would have been a better zone, I think, to give myself, you know, like maybe there. I mean, I would have lost regardless. I mean, it doesn't really matter, but, you know, I always try to see, like, how could I have done that better? What could I have identified that, you know, might have given me a better cost? I could have done that. Ooh, that would have been still a pretty meaty low. I guess stop loss wise. See, having my position up here gave me a better opportunity to have a more realistic stop loss, because I could have it right below this candle. And you're talking a 50 cents as opposed to if I had it, my zone like this, and down here, I mean, that's, I guess, about 60 cents. So either way, again, it wouldn't have mattered. But, you know, I took, I moved it a little bit. I took I took the zone where I did. I took it with the expectation of, this area holding. I was risking 1146. And my profit target was here and here. So you're talking about let's say that, obviously I did get filled, and on top of, not just did I get filled, but price interacted, right? So like, it's important to know that like every time I make a zone, I don't expect every zone to send price the other direction. I don't expect it to be the bottom of the trend every time. That's what I'm attempting to do. But the fact that price does come and interact with, the exact levels of my zone tells me that I was right. I wasn't wrong, right? My zone was impactful. The levels I chose were impactful. When price continued, either up or down, it chose down. And again, those are one of the losses that I will take 10 out of 10 times, because, they're priced into my strategy. I win, X amount of times, and I lose X amount of times. That's just, how the strategy works. It's how, every strategy works. And this is one of those good examples where, just like Wafu, I took them both right after one another. And neither one of them did I go, damn, that was so dumb, or wow, I did something wrong. I went, well, price told me that, yeah, my levels were good. Right at VWAP, we managed to meet price right at VWAP, which is, a good sign of strength. Same thing on the higher time frames, we're at VWAP. So, there's a very good chance that it bounces off these previous highs, these previous areas of resistance, hits the 20 and the VWAP, and continues up for a great rally. There's a good chance that it does it. This time it didn't. And, and that's just the way she goes. That's just the way she goes sometimes. So, yeah, that's that. That was the second loser on the day. Let's see. Or, I think that was my third loser or something. Regardless, let's see, what else did I trade? Oh, that's it. So the next one is Anbs. So this was the big one, right? This is the big one. And I didn't really call this one out in chat because I didn't want to, God, look at it. I didn't want to lead people. I did eventually call out a zone in chat that worked really well, and I was very proud of it, but it wasn't until up here in this action. And the reason for that is like some of these, the exact same thing happened with BTX. I don't want to, when price moves like this, it opened, or it closed yesterday at 25 bucks, and it ran to almost 100. So it's very hard to walk people through risk management. And when I was scalping this, it was insanely fast. Like I would literally be staring at it and sell at market as soon as it popped, because it's so quick. So it's very hard to talk people through on how to mitigate risk, how to adjust accordingly. A lot of people who are newer have a harder time with stocks that get more expensive like this, adjusting their position size to account for the risk. Or they think that like, yeah, I take 100 shares on a $10 stock, I can take 100 shares on a $97 stock. But when every average candle is $10 worth of range, that can really, really damage accounts, especially people who are under PDT and are still learning. So anyways, we'll talk about the zone I did call. Here. That was this one. Thanks, Firefox. 968, 8823. It's gonna be so hard. I'm just gonna have to type it in. 8823. And then 9068. 9068. All right, now let me show you what I was looking at before we pull up the picture. So I was primarily looking at the 10, and then I was looking at the 5. So right here in this action, I said, hey, if I was going to take a trade here, which I currently have no position, this is what I would do, because it's actually a pretty reasonable way to have really low risk, even up here in this more dangerous area. So I said you would have, and I'll pull up the picture and what I said in Discord as well, because there we go. So this is the picture here. As you can see, These were my zones. This dotted line was my risk. So why was my risk here? So this gave you an opportunity to have a, less than a $2 or about a $2 ad zone, this rectangle. This dotted line would be the forfeiture of the trend, right? So just like I mentioned earlier, if we go below these lows, I know that at that point that it's no longer, bottoming out with the intention to go upwards. It's simply, coming back down. So you could have taken a position here, got filled, and had plenty of time to accumulate your ads. And you could have a very, very reasonable, when the stock is up to almost $100, to have a less than $3 risk is, really good, especially considering the upside was, let's look. The upside was, what was that? $5, and then $8. It went up to, you could have gotten $8 out of this entire move. And I did actually end up saying that in chat. I said, that was an $8 move, dude. That was an $8 move. The move I took was actually at the 80 bounce. So I got in when it wicked down here, and I sold as soon as it went up. As soon as it went up, I think I got like $5 out of it. But it was an amazing trade, but it was literally like lightning quick. It's very, very hard to stay on top of that when I'm, talking about it in chat and stuff. Okay, so here's what I said. You can take this at pretty low risk. Downside is obviously more probable opportunity cost. Now, what does that mean? That means that the stock is gapped up huge on the day, and this is really the first time we're seeing significant consolidation. Otherwise it had just been halt after halt after rally after rally. So I said that the probable opportunity cost is that it comes down. That's likely. No position, but if I had to, I'd add in the rectangle, stop at the dotted line. Gives you about a $2 ad zone, $3 downside, $7 to $10 upside. And that was right here. And you could have gotten beautiful, beautiful ads with no risk. You were never, ever stopped out. And, I personally didn't take this, but I posted in Discord, and I hope others did, because it ended up immediately popping. And you know what I say? Right now, you sell them those pops, especially for an $8 move. That's incredible. But even if you didn't get out fast enough and you got caught on this one, you could have comfortably, with time, sold anywhere up here for $4 or $5. You could have taken the zone a second time. And then again, what do I say when you're retaking zones or when you're taking moves that have been consolidating or extending for a long period of time? You have more reasonable price targets. Every additional time you take your zone, bring your first profit target a little bit down, just so that you can cover yourself, take half profit there, raise your stop to break even. Because every additional time you take your zone, you expose yourself to an additional attempt at the downside. So, you take your profit quick, raise your stop to break even, protect your downside, if the move is creating, lower highs and stuff like that. So, yeah, that ended up being great. I did actually say that I expected the price to come down. Let's see. I said I expected price to come down to 80. Yeah, so right here, I said, oh, whoops. I accidentally got rid of it. Okay, so right here, I said, I'm worried she's going to fake out, close to 100, and come back down to 80. So I was looking at overall trend support. And this, 81.50 to 77.75 zone was where I figured that by the time price came down and met trend support, that's where it would be. So let's look at that, 81.50 to 77.75. And then 81.50. So if you look, when price sold off, where did it land? Exactly where I expected it. Because this was, on the 10-minute chart, where the trend told me it would go. You see? So when it did come down, it immediately came down to fill. I obviously didn't have a position, although you could have taken, you know, fucking $5-6 out of that if you were really fast and willing to do that. But I wouldn't have taken it simply because after that, you got to imagine she's coming down. And when tickers run up to $1 gazillion from they go up over 100% like that, when that backside of the trade does come, boy, it does not slow down. It comes down way fast. So yeah, I wouldn't have exposed myself to that. But I mean, I'm just giving you guys opportunities and explaining to you kind of how I figure that information out, at least when I'm taking my own trades. So that is actually it for me for the week. Hopefully everybody had a really great week. And if you didn't have a great week, just remember that it's important to kind of see where you are. And it's even more important to kind of see where you used to be. You know, somebody told me once that when you start trading, the progression goes like this. You're going to lose a lot. Then you're going to lose just a little. Then you're going to go to making just a little. And then you're going to go to making a lot. And I can absolutely look back to when I first started trading and think, wow, yeah, that was definitely the losing a lot phase. And now I've, you know, kind of muscled through losing a little. I'm between losing a little and making a little, kind of in that range. And I can absolutely see where I am, you know, in the spectrum of progress. And that gives me motivation to be like, you know what, tomorrow might be the day that I move to the next step in that rubric, that I might take that next step. It could be tomorrow, it could be next week, it could be next month. But as long as I keep doing it, I've already, you know, realized that progression from point 1 to point 2 is already taking place. I totally can see that, you know, I used to be losing a lot. So if you are losing a lot or just losing a little or just making a little and you want to do better, you just know that, you know, if you can survive in this game and you know, without giving up, then, you know, you're gonna make that progression. So if you did have a bad week, you know, next week doesn't have to be the same. And next week could be the day that you make the next step to that next point in that progression. And you know, I hope that that can be the same for me and anybody I trade with, and all of the people who watch these. And you know, I want all of us to be able to succeed. There's definitely the opportunity to do so. So without further ado, I'm gonna enjoy my weekend. If you guys need anything, feel free to reach out. Obviously, my DMs are always open. Enjoy your weekend, guys. Be safe, and I will see you on Monday.